Hello, everybody. We're going to do some technical analysis on Bitcoin. Stay tuned. All right, here I'm looking at a daily chart of Bitcoin, and we're going to figure out or try to figure out what's going to happen next because we got a lot of issues with Bitcoin. Price action is pretty bearish. All right, so as you can see, we got the 5 wave here, 5 wave, and then the ABC correction to the downside. Now, in the ABC correction, if we go to this Elliott wave, explain the Elliott wave. The ABC correction usually targets the 61.8 retracement. Now, if we go to back to the chart, we can see here 61.8 retracement is right here, which is where Bitcoin actually came down to. It touched it a couple of times, one, two. However, these are wicks. It didn't actually close down there. There's no body that reached down there, a candle body. But we did touch it with some wicks. And it is possible that it can go up from here, but there's also a possibility for more downside, which I will go into a little bit more. But I just wanted y'all to see where we at on the Elliott wave, 5 wave, ABC. Technically, we did retrace down to the 61.8 retracement, but they're just wicks. They're not candle bodies, okay? So if it continues to go down, the 61.8 retracement, it's around the 30,000 range, 30 to 31,000 range, okay? But one thing I want you guys to keep in mind is that millions of traders are probably using Elliott wave. It's possible. And it's possible that traders are looking at the 61.8 retracement. So we got to think to ourselves, the market makers, they probably see this too. The market makers are the guys or the girls that manipulates the market and moves the market. They're the market movers. So they're probably going to see this and think to themselves, there's going to be a lot of people that are going to wait to enter around these levels. Right? So if you want to screw over the retail traders as a market maker, what would you do? You would probably push it down and possibly go even lower. All right, if it goes lower, we do have support around 27,000, which was, a previous high. Got a previous high right here. If it breaks these lows, which is the 61.8 retracement, we could get down to 27 and get a bounce from there. Below that would be around the 23 to 21,000 range. So those are our support levels. Okay, so we hit the bottom, but they were just wicks. The volume didn't actually, the candle didn't actually go to the body of the candle. So I'm watching. All right, so this is something else I want y'all to take a look at, okay? Because I didn't just use Elliott wave to do my analysis on Bitcoin. It's not good to use just one tactic. I like to use multiple tactics, right? So it's a bunch of things. I'll spread it out so you guys can see it better. Okay, so I've been using the wick-off method. That would be the accumulation. It could be schematic 1 or schematic 2. That still remains to be seen. But the accumulation schematic of wick-off is what I'm using to track this. All right, it looks pretty similar so far. Got the S, P, S, Y, A, R, S, C, S, T, right? A, S, T, S, T. So I'm thinking we're at S, T. So if you look at Wickoff and S, T, we should be heading up high past AR. So AR is right here, which is around over 42K, 42.6K. So if we follow this, we should be going above 42.6K, possibly to maybe even 45 to 46K. I'll add something right there. So if it follows the wick off, it should be going up here, right? But it's not. You see a bunch of Clifford candles, red candles, very bearish, right? So I want y'all to take a look at this area right here. As you can see, a symmetric triangle, sideways actions, right? The market makers, they purposely set up, at least is what I believe, they purposely set up the support, their support, and resistance levels. They purposely set this up because what are we taught as retail traders? You go long at support because that would be the floor, right? Or you go short at resistance because that would be the ceiling. If it hits the ceiling, it'll bounce down. If it hits the floor, it'll bounce up, which is what's happening so far, right? So if I'm a market maker or a market mover and I want to take money from the retail trade, what would I do? You guys got to understand, when people entered here, most likely they set a stop loss right there. Area of liquidity, right? Somebody probably entered here, they went long here, and they set their stop loss just out under the support, right? Just like before. Or take a look at this one, for example. This is where Elon made the terrible post that about Bitcoin dropping, and then Bitcoin just started dropping. See, us retail traders, we see these resistance. So when we enter, we would set our stop losses just outside, just above the resistance line. So as retail traders, when we see it about to test the resistance again, we're probably going to short right here, right? Probably going to short right there at the resistance line, and then add our stop loss around there somewhere, just right above the resistance line. Because we short at resistance, we're expecting it to go down, right? But instead, this went up, a false breakout. You see, the market makers know, they can see our orders. They know that we was trying to short here or something, right? I don't know if we could short Bitcoin, but I'm sure some people can. But if we was to short this, they know we was short here at resistance. So the market makers, they purposely move it up, take out all the stop loss, buy up all the stop loss, take all these people out of their trade, and boom, reverse it down. Okay? So when it hits support again, what do you think retail traders are going to do? They're going to bet to the upside. They're going to go long and probably set their stop loss around there. Think about it, guys. We enter our support to go long. We add our stop loss just under the support. They can see this. They can see our stop loss. Y'all understand? They can see our stop loss. This is an institutional candle, if you ask me. They see it. They know where we add our stop loss, so they break it down and take everybody's stop loss out. Take everybody's stop loss out. This is an area of liquidity for them. Because they know. They know that's where we add our stop loss. So, this is what I want you guys to watch out for. If you see a big green candle, a big Shrek candle going up, bouncing up to the upside, that's the institution manipulating. They tricked you out. They got you thinking where support is, thinking you can buy support and go long there. And you set your stop loss because you want to manage your risk, and then boom, they take you out. Now you're out of the trade. Possibly tomorrow, if you see a big green candle, or this is a daily chart, only 1 hour, 20 minutes. So in the next couple of hours, if you see a big green candle, you know that the market makers manipulated this and they want it to go up. And if it goes up, it'll possibly go up to around 45, 46K, matching the wick-off method. All right, this could be the dip. This could be where we're at right there. For all we know, this could be where we're at right here, the dip. Dip, and boom, all the way up. Can you guys see it? Okay. It could go up. It's here, down, and boom, all the way up. This is what could happen. You see that right here. Go up, boom, down, and boom, all the way up. So it's still possible this could continue to follow the wick off. It still remains to be seen. So if you see a big reversal tomorrow, you know the market makers, they played us. They know where our stop loss is. They took us out, and boom, they reverse it, taking out all the bulls. And it's possible we'll move all the way up to 46K. This is how they manipulate us. This is how they play us, guys. Using the support and resistance, this is how they play us. So watch out for a reversal tomorrow. And if there is, I have a price target around 45 to 46K. If it continues to go down, we have support around 30K, which also happens to be an area of liquidity. And if we go lower than that, I have support at 27K. And then I have support at 23 to 21K. All right, so watch these levels. Take it one level at a time, guys. One day at a time. Be patient. All right. So I hope this was able to help. I hope this makes sense. I'll see y'all next time.